a lot of questions about all sorts of about Lyft and what's happened to its share price, about the Uber IPO that's coming. We just reported yesterday WeWork is coming in terms of IPOs that are on board here, and what the market's really thinking. Were you surprised at what's happened to the stock price?
Actually, I don't try to predict the stock price at all, and I think about companies and their futures, and I think the company's absolutely doing the right thing. Their heads are down. They're focused on the operations of the business. They're focused on delivering for customers and improving their service. Transportation as a service, and Lyft is the first one to go public, and it's a brand new category. So there's a lot of investors that don't really know what that category is going to mean. And it's early days. There's less than 5% usage in the United States for ride sharing today. And we're kind of end to end. We're doing, scooters, bikes, cars,
But do you look at this IPO as a success?
Yes,
you look at it as a failure? Do you look
No, I think it's totally a success. I mean, the
pricing of it as a success? Because if you were an investor at the IPO price, you're not a happy person.
Well, it depends on how long of an investor you are.
Right.
If you want to flip it, immediately, that's a different story. But I think we priced it right. I think we had very good momentum for the IPO. We raised the appropriate money that we were looking to do to help keep the company healthy. And we look at this as a marathon. It's not a sprint.
Let me ask you another question.
Lyft IPO, you heard board member Maggie on the company's IPO quote, it was totally a success and priced appropriately. Again, debuted at around like $72 a share, when as high as 87. Now, as you probably saw on the screen already, it's trading at around $59 a share. Let's take a look at the numbers. Okay, so first thing is $911 million in losses, right? So that's a lot of money, right? And the losses were wider in 2017 by 32%. So the company, they're making an effort, as she mentioned, long term, they don't just do cars, they also do scooters, right? Just transportation as a whole. But the goal would be for them to break even, right? For investors, if you want to invest in Lyft. The other thing too is they had $2.2 billion, in revenue. Now that's pretty strong. Also, they had $8.1 billion in bookings. That was an increase of 76%. So, that's another, favorable bullet point for Lyft. Obviously, this board member has more of a long-term perspective, which is what I mentioned. I think that, Lyft, being that it does have a better brand marketing image than Uber does, especially with Uber using the N-word in its customer support. I think Lyft can move and increase rider share and increase their share of the market. Another thing too is that it's got to be a long-term play, right? A lot of people get so excited at the IPO, but like Warren Buffett said, he doesn't even buy IPOs. A lot of that is just, a speculation till you start to uncover, what these companies are really about in terms of their product, in terms of their competition, in terms of the, economy, and more importantly, their vision, right? Management. So, which goes into my next point. Does it have a unique product? Absolutely. How does it fare against the competition? I would say it's pretty fierce. They've kind of capitalized off of Uber's mistakes. Uber's gotten, sexual assault, racism, sexism. Even the former CEO Travis had an issue with one of their drivers. and they apparently it's they don't treat their drivers very well. They do have a lot of issues that they need to tend to, especially given that they're doing an IPO very soon. So, but that's all good for Lyft. Let's take a look at the management. The management, Logan Green and John Zimmer. I mean, these guys seem to be very much in tune with transportation. Logan Green was a UCSB alumni, and he was the youngest director for the Santa Barbara Metropolitan Transit District. So it seems like he's kind of had this sort of interest in transportation. So it only makes sense when he teamed up with John Zimmer that they formed Zimride, which later formed Lyft, turned into Lyft, rather. Okay, so, and then I'll just real quick, I'll just say this, is that there was a report by the investment firm Raymond James, and it said that Uber is the most popular ride with 60% of the market share compared to Lyft's 23%. But a third of the respondents picked Lyft for its driver friendliness and brand image, right, compared to 1/4 who picked Uber, right, using those using the same guidelines. So, okay, so if we use that information as well, that works in Lyft's favor. Not to say that Uber is a bad investment, but just to say that I think that Lyft, they're playing their cards right. So being that it would be a long-term play, I definitely think it would be something you should take a look at. Of course, do your due diligence. This is not an investment recommendation. This is for educational purposes only. As you know, this is my field, so feel free to comment or reach out to me for further questions. Overall, I think Lyft looks like a better investment long term, but it's more of a long term play. It doesn't look like it's gonna earn too much in the next few years. They obviously have a lot of work to do. Another issue too is if you make more money, right? You also spend more too. So it's going to be interesting to see, how that pans out as well. But like Warren Buffett says, stay within your circle of competence. Invest in things that you understand. I think a lot of people have used Lyft, and take a look at some of their some of these articles online and see for yourself whether this could be a long-term play for yourself. Definitely I think the future of this industry plays a key part. Obviously there may be some mergers and acquisitions, or somebody may just buy Lyft out outright. You never know. So all right, that's it. That's your boy, Mr. Johnson, Mr. AKA Financial Motivating, Hip Hop Educating. Holla at your boy. I'm out.